Yeah, it's like
right. It's gone 9:30, so I think we'll make a start. Welcome everybody. I'm going to ask Deirdre to lead us in the opening karakia. Deirdre.
Good morning, everybody. Tuia ki runga, tuia ki raro, tuia ki roto, tuia ki waho, tuia tātou te tangata kia, ki te kaupapa o te huine, ki te kaupapa o te rangine. Māori ore ki tātou katoa.
Thank you. Just a few housekeeping matters. We've got people on Zoom this morning. So reminding you that just the normal housekeeping rules apply. Just also draw your attention to the location of the bathrooms, which are just outside the door, and the fire exits, which are clearly marked in here. We'll now move to apologies, and we have two for Councillors Mackenzie and Walker. Do I have a mover and seconder for that?
I'm happy to move.
Thank you. Thank you, Graham. All those in favour say aye. Against, carried. Thank you. Declarations of interest. Any new ones or ones that are particularly pertinent to the agenda? Graham.
Reports, risk report, risk report in PX, whether you want to take this now or at the beginning of the PX session.
What I was proposing to do, as both you and I have a conflict of interest with a part of that report, but we're so close to not having a quorum that if you and I recused ourselves, we wouldn't have a quorum. So what I'm proposing to do, that we'll consider that paper, but exclude the consideration of the item relating that we have the conflict with, if that's all right with the committee. I think that we have to be pragmatic here, otherwise we'll just get so yeah. Okay, but thank you for raising that, Graham. That moves us on to confirmation of minutes, the two meetings on the 8th of December last year. Can I have a move? Well, are there any matters of for discussion or correction? Okay, so can I have, I'll take that as no. Can we have a mover and seconder for those? Thank you, Graham. Thank you, Councillor Butler. All those in favour say aye. Against, carried. Thank you. I'm now proposing to slightly change the order of the agenda this morning because Ms. Thomas has to get away, and also John Mackey is busy at this time. And so I've said to him that we would handle the matters that he has to be involved in first thing. And so I'm proposing that we'll do the external audit matters, long-term plan update, and then the insurance update at the end, if that's all right with the committee. So, Charlotte, we're in your hands.
Through you, Mr. Chair. So I've just got two corrections to make first before I just give a quick summary of the report. The audit fee in the summary, which is paragraph 1.5, that should actually, that paragraph is actually wrong, sorry. It should be as it is in the main body, which is 4.3. So we've agreed the audit fees for 2023 and the fees were 237, which was an increase of 33% compared to the actual fees in 2022, and Audit New Zealand have proposed these will increase to 306,989 for 2024 and 330,510 for 2025, all plus disbursements. So apologies for that. And the second correction is in paragraph 1.3. where we actually revalued our buildings in 2023, not 2022. So I'll just do a quick summary of the report. So the purpose is obviously to update Audit and Risk Committee on our audit of the annual report. There's a separate report going on the long-term plan. At this time of year, we always try and present to you our key accounting judgments. So this year, the only ones that we have, which we need to share with you this time, are on valuations. So this is quite a challenging area. We need to make a decision whether to revalue our core infrastructure and land and buildings assets each year, as we hold them at fair value. And it's a bit of a crystal ball exercise because we have to look forwards to what we think inflation will be at the 30th of June 2024. Valuations are quite expensive, and also they take a lot of audit time. So we're quite careful not to get them too regularly. So this year we have reviewed all of the indexes and decided that it's only been 2 years since we've revalued Three Waters, but we need to revalue Three Waters again just due to high inflation. It has a double benefit. It's got the annual report, but it also gives us an insurance valuation. The other major asset class we have is roading. We've decided not to revalue roading. We also consider insurance on that because we don't insure our roading network. So while there is quite a significant increase in roading, we don't think it's material to the financial statements as a whole. We're waiting to confirm with Audit because they have a view on where they disaggregate. I think we've spoke about this before in previous years. They disaggregate materiality. We've considered their disaggregation method, but we still take the strong view that it's materiality to the financial statements as a whole. We won't just get valuations because individual classes breach the thresholds. We're also revaluing rivers, and we made a decision about 5 years ago to hold rivers at cost. They're non-depreciable. When there's incidences, they are repaired straight away, and so it doesn't impact depreciation. And so we made a decision to revalue them at cost, but Audit New Zealand have now raised an issue that we might not have been allowed to do that. So that's something that we're waiting to discuss with the new audit director. We're getting evaluation for insurance purposes.
When you say rivers,
yes,
do you mean flood protection assets?
Yeah, sorry, the flood protection. We call them rivers in the financial, but yeah, they're the flood protection assets, the rock works, the boulders and things you see all around the rivers. So that's, I guess, an unresolved issue for this year's audit. We're not aware of any other significant issues. Obviously, we have the audit plan. It's all as expected, really. We've got the interim audit due to begin on the 14th of May. And other than that, I've just noted in the other matters as well that we're not aware of any frauds that could affect the financial statements. Last year at the council meeting, there were the questions that the audit director asked. So we're just considering ways that we could maybe brief councillors earlier to try and get that information from their perspective. Do you recall those meetings? In terms of controls, we're fairly confident everything is operating as it should be, and there's a huge increase in cyber crime, as everybody is aware, and the risk generally of things like particularly accounts payable fraud, with the use of AI trying to extract money from us that way. So we're responding to that at the moment through increased manual controls, which is mainly calling directly suppliers to make sure they are who they say they are. Over to you.
Thank you. John, is there anything that you'd like to say at this stage? Bearing in mind, we'll move on to the next item to consider the LTP. I don't propose that we discuss the audit plan that you've submitted at this meeting, because I think it's more appropriate that this committee does that with the new audit director when we are advised of their appointment. My advice from the OAG earlier this week was that would be imminent. And so if we can just carry that forward. But are there any comments on the audit matters at the stage that you'd like to make?
Well, just point out, Charlotte's raised the issue of the fair value assessments and the valuation, so the new appointed auditor will look into that. Just a point to note, the Waimea Dam is in that point of transition, so it might be complete by 30th of June, so that will have accounting implications, and that's noted in the audit plan. So those were the only two comments I think I should make.
Thank you. Committee, questions? Graham.
Thank you, Mr. Chair. On your valuation process, I'm involved in doing audit quality reviews in various states in Australia for the Auditor Generals over there, and they have a philosophy and a stated paper which gives guidance as to when you should be doing these valuations, which is sort of agreed. And I guess the question, to me, it seems very effective and logical that certain parameters says don't do anything. If you get up to the next band, you just do an index valuation initially, and then if it's over a certain amount of anticipated movement, you go to a full valuation. And there's an override saying, but anyway, you should get a full valuation in a certain number of years. And it depends a bit on asset class, and there's been some really good guidance given, which does simplify things. And I guess a question for John is there any such guidance or intention for such guidance? Have you heard anything from the OAG, which is probably the level that would come from?
Okay. No, I'm not aware of the OAG promulgating guidance on that. There is established processes from opinion review committees. So where there has been situations where councils have not revalued, then those matters have gone up to see whether it affected the audit opinion. So that set various rules, set parameters.
Is that information be published in a working guidance document that councils can utilise, or is it sitting within the ORC minutes, which we don't have any access to?
I will check, because this is a very good point. I will check and come back to you.
Supplementary, if I could. Sure. The rivers or flood protection assets, one of the matters I think that needs to be considered is the continued effectiveness of those assets. And what I'm saying there is we've got an existing riverbank flood protection network to hold the rivers in place and protect our ratepayers, but we're channeling, the rivers are bringing down silt and various other material from the mountains. And is the effective height of those assets being considered, because they might be at the same height compared to the land outside, but what is the capacity to protect us from point of view of riverbed height inside the protection, and do we have the same functional asset ability for that asset to perform, and has there been any work done to assess that, so the effectiveness of those stock banks may deteriorate over time potentially?
The rivers team will probably be the best to speak to, but we do speak to the rivers team each year, as we speak to all infrastructure assets team. And my recollection of the discussion last year was that the rolling program of work on rivers does address those issues. So to top up the rock as required and to do the de-sludging, I think they call it.
Question I raise is that just maintenance to get it back to the as designed level, or have we actually considered whether the riverbed itself has risen and therefore the effectiveness of the stop bank reduces? And is there a survey across all of our rivers and monitoring of that in place?
We shall make sure we include that specific question.
Thank you. Any further questions?
Thank you, Mr. Chairman. So you did indicate any questions relating to the audit or costs we're going to leave for now?
Yes, the audit plan document, I don't see any point in discussing it at the moment. We need to discuss that, I think, with the new appointed auditor,
Okay.
which I understand will be imminently advised to us.
Okay, excellent. Happy to do that. And then just to follow on from Graham, in relation to the rivers, we also have had quite a lot of new rock work, and some rock work has been paid by adjoining landowners or contributions. So how would we, and particularly I'm thinking of Gold Pine in the Upper Motueka where they made it substantial, how would we revalue an asset or even value an asset like that?
I'm not sure the answer to that question.
But Graham's certainly right, and there's been a substantial increase in this rock work, particularly in the Upper Motueka by ETM YMEs, and even lower Mot since we had the two events in 22 and 23, I think it was.
Through you, Mr. Chair, there's a couple of really valuable questions that have been tabled, and they're kind of reaching into an area where we would discuss either at the Operations Committee or at the Environment and Regulatory Committee. Could I suggest that we take this offline and I can speak together with Charlotte and with Rob Smith and my team, and we can come back with something which addresses the points raised, because there's the element of valuation and how we treat that, but then there was also some conversation in there in terms of maintenance and contributions to the work that we do in the river environment. So Rob is the guy who can speak to that most fully, and perhaps if we take that back and we come back with answers for members.
Yes, I think that's a good idea. Graham?
Agree totally there, because there is an interface between the operational side of this and the accounting for what's going on that we need to make sure as this committee that the interface is actually working and our policies and processes are affecting the reality of what's happening out in the field. So that would be very valuable to get some feedback, and so that we can, as a committee, be comfortable, and the financial services team and Charlotte's team are able to be comfortable as well, and we can be comfortable in the answers that we give to the auditors, because these should be questions that the auditors will be asking somewhere down the track from time to time.
Yeah. Marsh, our valuers, are actually doing site visits this year as well, so it's a fully comprehensive valuation. So they will be speaking with the Rivers team directly as part of the valuation process, but we will make sure that those specific matters are covered. But they'll be visiting our buildings as well, and just making sure that our data, they don't test everything, but they're making sure on an overall basis that it's consistent with our data.
Yeah, I think the other issue with these flood protection assets as to what is maintenance and what is capital. And it sounds to me, if the work's that substantial, we could be seeing some component which is actually of a capital nature. And so again, the accounting treatment of that is very important from a rate setting point of view.
As a basic principle for the council is there that if you're returning an asset up to its design spec, it's maintenance. If you're increasing the design spec, and that to me, to win river stop banks would be increasing the distance between your riverbed and your capacity of the amount of flood volume that it can retain. That would be capital, and therefore, we can account for that over an extended period of time.
So my understanding is exactly that. For example, the Mochbaker Stop Bank project, especially if we're improving the rock protection in that area, then it's capitalised. If there's been an incident where, say, it's been washed away and we need to replace it, then we're not improving what was already there, so we wouldn't be increasing our assets.
Are there any more questions? If there aren't, can I have a mover and seconder for the resolution to receive this report, please?
Happy to move that.
Thank you, Graham. Thank you, Deputy Mayor. All those in favour say aye. Aye. Against? Carried. Thank you. We'll now move on to the update on the LTP. And Charlotte, you don't need to be here for that, I understand. Thank you.
Good morning, Mr. Chair and committee. So we're just getting ourselves organised. So largely, I'd like to say the report is read. Just to come a little bit of an update. So I believe the audit is almost complete. I believe we got the last question late yesterday, and I've provided a response this morning. Subsequent to the report, we received further feedback from the Opinion Review Committee, which took place on Friday, which we've sort of addressed in one way or another. So yeah, hopefully we are close to the end of the audit now. And I think Matt maybe wants to make a further comment.
You actually covered it, Alan, through you, Mr. Chair. You actually covered the point, just that the last one sort of came through and was answered, came through last night and was answered this morning. So I think it's sitting with John at the moment for his comment. I'll probably leave it there, but I might take the opportunity to talk about a couple of other things in due course. They'll probably come up in the discussion.
Well, at this stage, John, would you like to give us an update on where the LTP audit of the consultation document is from your perspective?
So as Matt has outlined, there was one issue that we raised last night. There is another issue that's come back from the hot review panel this morning, which I was researching before this meeting started, and I'll provide some detail. It's about how rates increases are disclosed in the CD. But I don't, that's something that's just mechanical and can be worked through. So the other issues have been worked through for the committee's benefit. We took 5 matters to the Opinion Review Committee at the OAG because I signed the audit opinion on behalf of the Auditor General. And so any matters that affect that opinion have to go through a clearance process. So those 5 issues that we took, first one was the proposal of the Council for rates affordability. The view of the Opinion Review Committee members was that as it was in the draft consultation document, it didn't comply with section 93B. Subsection B, because it didn't clearly outline the choices and the impact of those choices. So that proposal has been reworded, and we've got clearance on that. So that's good. There's uncertainty over the funding by Waka Kotahi of transport projects. You would have heard that in the media. So a whole lot more is wanted to be spent than the Waka Kotahi has the funds to co-invest with. So there is an uncertainty on that funding that impacts in 3 areas for the council: is the roading maintenance projects, the public transport, and the active transport, which is roading and walking. So there'll be an emphasis of matter paragraph in the audit report, which is no criticism of the council. It is just to highlight to the readers the uncertainty. So it will refer to those. The The third matter that we took to the Opinion Review Committee was about the external funding of the proposed community facilities. They are now comfortable with the added disclosure in there about what would happen if the proposed level of community fundraising didn't occur. So that's been dealt with. The council, like other most councils who are in a growth situation, needs, under the National Policy Statement on Urban Development, to fund infrastructure before they receive the development contributions that will finance that. So that means your borrowing increases. And so over the term of 10 years of the plan, the borrowing increases by $60 million to fund that infrastructure. And that shows up in negative reserves on the council's balance sheet. So we checked out about whether that accounting was appropriate. And we also raised the issue about that we needed further clarification so that the readers could understand that situation better. So that additional disclosure has been received and the clearance has been made on the accounting treatment. And the final point that we took to the Opinion Review Committee was about climate change retreat. So that is a very challenging issue with a potentially high price tag on it. So there was the view of the committee was that there was no emphasis of matter needed if additional disclosure was provided in the consultation document, and that has been added.
So in summary, John, what you're telling us is that after the hot review and the ORC review, the consultation document is basically largely there.
Yes.
From an audit point of view, with the only modification being there's going to be an emphasis of matter about the NZTA funding, which other councils are getting also. Is that right?
That's correct.
Thank you. Any further comments? Any questions? Well,
if I may, for you, Mr. Chairman, John didn't actually talk about the prudent benchmarks. Are they just for information that we have in the around rates increases, debt caps, and council to pass a resolution at the LTP adoption? Wasn't quite sure what that was about.
who's going to answer this? John?
Right.
I'm at 3.6.7.
So when the council adopts the long-term plan, then they need to pass that resolution that you mentioned. In terms of the prudential benchmarks, we looked at those and the fact that under the prudential benchmarks balanced budget one, the council didn't achieve that in 5 out of the 10 years, but we were considered that was still prudent, because if you have a look at the percentage, it was quite, for 4 of those years, it was very close to the 100%. So it wasn't a indicator of any lack of prudence, because
Further to that, through you, Mr. Chair, is that the funding of depreciation is a key part of having a balanced budget. As you'd be aware, we're moving to fully funding that over the next 5 years. So that's always a component of it. It's almost not unexpected, I'd say, given that journey.
Right. And then just one further around the revaluation update in the report at 4. Is that it leads to a small delay? That's not going to affect us anyway in adopting the LTP or that information?
Through you, Mr. Mr. Chair. No, that won't. The delay, as you would have heard Charlotte mention before, she's doing the revaluations this financial year. So we had the timing wrong, and that we had the revaluation occurring in year 1 rather than year 0. Ultimately, the two offset in terms of how we manage the funding of depreciation. So there's no impact, I suppose, on the base figures that we're consulting on.
Right.
We just need to get the timing correct.
So were you asking about that revaluation that Matt's talking about, or the revaluation of the properties for rates? Because there has been, further kind of information and delay around the general revaluation of properties, and it is affecting us. So it sounds now like it will be kind of 28th, which is the day we start the consultation, when we're likely to have confirmed figures. So that means that the consultation document is going to have to be issued with those example properties based on preliminary data rather than actual data. We will be able to update the consultation document online once we've got the final information, but the printed copies will have been printed, and so they've got a note to that effect in the document. It also means that our rates tool, so this is where people can go in and get an estimate of the rates for their individual property. That's not likely to be available until kind of mid-April now, because we won't have the data to populate it until later in the process.
Surely Credible Value knew that we had this timeline and dates that we were working to, and did they pull out all stops to make the deadlines that we had?
Well, again, I don't really want to speak for Credible Value, but I know that there's been dialogue between them and the Office of the Valuer General, and that's really what's caused the delay around the Office of the Valuer General's level of comfort with what Credible Value have prepared. So
it's going to be tricky, isn't it?
Yeah, it's definitely suboptimal, but we're sort of outside of our control, and we're really just reacting and doing the best we can with the timing and the information that we have available.
It's got to the stage where people are actually looking for their valuations now.
Mike. Through Mr. Chair, I can probably assist with the concerns around the property revaluations or the district-wide revaluations. So the timing for those revaluations was pushed out by the Office of the Valuer General because they needed more time to do more intensive audit work around the valuations to ensure they were a high quality. I was at the review meeting with the Office of the Valuer General and with QV. They were generally satisfied with the quality of the work, but there were a number of matters they wanted additional work done on. Particularly challenging is the rural valuations. That's made more complex this iteration because we have the Waimea Community Dam coming into effect. And of course, whether or not a property has an affiliated consent or not affects the land value on that property, because obviously in a rural context, access to an augmented or reliable water supply makes a big difference to the valuation of the underlying land. So they are working through that. We have had conversations with both QV and the Office of the Valuer General, trying to get an answer sooner. Unfortunately, it's just like the audit of our annual report or our LTP. There's a process that needs to be followed, a recommendation that goes to the Valuer General and then gets signed off. So the 28th of March is the date on which we're expecting that. And of course, it takes us a small amount of time to load the information into our system so it's available to the public. Ideally, we would be back on the old time frame, which saw those valuations go out for consideration by property owners around just before Christmas through to January. Unfortunately, we're unlikely to see that timetable again until resourcing at QV increases so that they can meet the tighter deadlines, but also resourcing from the Office of the Valuer General is available to do the audits earlier as well. So it's a little bit of a perfect storm for this council, because we are one of the councils that have its district-wide revaluations done in the same year that we are doing our long-term plan consultation.
Thank you, Mike. Any further questions? No. Just to advise the committee, Graham McGlynn and myself met with John Mackey and Laura Cannon earlier in the week, and the feedback was that the LTP audit had gone very well. And I think I've heard similar comments from the council's perspective. That's very pleasing to hear. I do understand there have been some cost overruns on the auditor's part, but we will discuss those at a later date, I think, rather than, because information has really only just come through prior to coming into this meeting. John, is there anything else that you want to bring to the committee's attention at this stage, or are you reasonably comfortable?
I'm reasonably comfortable. As that, yeah, as I said, there's one extra change to the CD on the rates increase, and I'll provide that information through to Matt and Alan after this meeting.
Okay, thank you. And so we're on track then to deliver the consultation document to council on time and as planned?
Yes.
Great. Thank you.
Right.
We just have, if there are no further questions, to get a mover and seconder for the resolution to receive this update report.
Oh, happy to second.
Thank you. All those in favour say aye.
Aye.
To the contrary, carried. Thank you very much.
Thanks.
Thanks, John. Which brings us to the insurance report.
Through you, Mr. Chair. This is an information report. I have put some detail in the report to assist councillors in understanding the different aspects of our insurance placement and some of the risks that we're exposed to that go back, for example, the risk pool calls, which go back some years, and we did get a call on one of the pools, November 23, $108,000. So until those years are closed out, council has a liability there. This is a work in progress, the way in which our insurance are placed. In recent years, insurance costs have shifted from around 1.3 million to about 2.4, 2.5 million. So it is an area where we have seen significant increase in council cost. There are a couple of drivers to that. One is the increasing value of our assets. So for our material damage policies, even if the premium and the dollar stayed the same, the increasing asset values would have pushed those premiums up. We are seeing more claims as a country as a whole. And so the risk profile, therefore the premiums the insurance companies need to recover to remain profitable increases. We are also seeing a change in the risk landscape for council, for example, in our public liability cover. And so we are attracting more claims, and the areas that we are exposed to are expanding as well. So, for example, mixed defect claims. So you can probably appreciate there's an exclusion for weather-tight homes. But if they open up a weather-tight home and they find there were other defects that our building consent people should have picked up at the time, they are splitting the claim. And so you have this exposure for these additional claims. That was one of the key drivers in the risk pool call last year. The second area is claims where the court is considering whether council should be responsible for economic losses. And so the example is before the courts at the moment. It's the Buchanan case, where the owner of the property was seeking economic losses from council over a pool consenting matter. The third area which will affect our renewals, is a reluctance to, a preference to probably put in limits on some of our liabilities, and particularly in the building assurance, building consent area. So, for example, you can imagine our exposure in issuing a building consent for the Waimea Dam is potentially hundreds of millions of dollars. It's a $200 million process. Nelson City will have a even more challenging position when it does the building consent, for example, for the new regional hospital development. And so they are driving concerns from the insurers that they need to limit their exposure for those types of events. And so that is one of the drivers around that public liability cover. And we may have to take more of it in the local market, which is more expensive. We're just commenced the conversations with the other members of the Top of the South Collective. So I would expect to have an update for the committee on what the landscape looks like, including what the premium increases or not are going to look like for the next meeting. The report covers off a couple of pieces of work. Now, we have typically been a transactional buyer of insurance. Due to other commitments and resourcing shortages, we've typically not been as strategic as we could be. And we typically haven't had the opportunity to look other than the conversations across the collectives about what we should be insuring, what our deductibles will be, whether it needs to be replacement or indemnity value only. They're conversations we need to have. So in my report, I have referred to creating an insurance management steering group. This is to get a wider range of skills into the program in terms of consideration of the way forward. As I said earlier, typically finance has been finance-led. We need a wider range of skills there. That steering group will be brought together. And so I envisage that in the paper. We're talking about an insurance strategy, but that insurance strategy would also include decisions about what we should insure, what we should not insure, what level of deductibles we should have. Do we want the self-insure? If we want the self-insure, do we need a self-insurance investment fund? I would see those conversations going to council, because decisions like we're not going to insure rural halls for replacement, for example, is one that has a high public interest. And typically, the cost of replacing a rural hall in its current form might be $2 to $3 million. Certainly, you'd get no change out of $1.5 million. And you, as councillors, will be looking, saying, is that the right facility that we need within that community? Is there some other facility we need within the community? So they are the conversations we want to have with you. Having said that, I'm quite happy to take questions on the report.
Thank you. Graham. I'm glad you've touched on, covered a lot of the points, which is really a bottom-up review of everything. I can say from other councils as the similar discussions are happening, particularly around community halls and community facilities, and a consultation with that community as to what you're thinking and what the logic says, whereas it then provides a basis. The community says, no, we desperately want to keep the XYZ hall. You can then move through and say, okay, well, the maintenance costs, the insurance costs, etc., will come as a targeted rate to that community, which gives you an opportunity to recover the increased costs along the way. So it's very important to have the community consultation part of it and understanding what all the implications the community needs the understanding to give the appropriate feedback. So I'm definitely seeing targeted rates going in other councils for these types of facilities so that they become self-funding for that particular entity and not necessarily us keeping an old hall that was built in the 1930s and is an earthquake risk, going if indeed the maintenance costs, etc., are very high, the insurance costs are very high, etc., and also considering demolition costs in case of a episode whether in fact we can self-insure that particular bit, because we've got a wide spread range of buildings across a fairly large area. So it's unlikely that we're going to lose them all at the same time. So we may be able to consider a saving there.
I'll let Councillor Butler.
Through you, Mr. Chair. Yeah, just following on from there, if we lose facilities due to disasters, I understand that the government provides 60% funding assistance. So would that actually be taken into account if we are, you know, when we're insuring our facilities that may be damaged in disasters?
Through Mr. Chair, yes, as noted in the report, that applies to infrastructure assets. I might be hard pressed to bring the halls into that sort of definition, but we do. So if our South Island collective, which is managed through Aon, is for the underground assets, we are only insuring 40% of the value of those underground assets on the basis that the government will provide the other 60%. The government's rules in terms of providing that 60% is the assets have to be insured if it is possible to insure them. So we're very careful to make sure we comply with the requirements to ensure we have that government 60% contribution. I would suggest that getting 100% insurance cover for underground assets would not be possible in the current insurance environment. So the fact there is government support is key to us being able to get insurance around infrastructure assets.
Thank you, Mr. Chairman. For you tonight, just a couple of questions around the report. You're talking there about self-insurance and raised by elected members occasionally. The temptation, of course, is that once you build a bit of a pool, elected members think, oh, we can use this for flood recovery or something else, and the lump sum doesn't grow because we pull it for something else, as we've seen with our disaster fund. So it seems like a good idea, but the commitment has to be that it's going to be for self-insurance and build the fund to a sustainable level and leave it there, is my first question. Do you think that's really a viable option with those factors in play?
It is difficult. You would want to ring fence such a fund to the extent it could be ring fenced. And yes, it requires a high level of financial discipline around the council table. It's not impossible to achieve that. Auckland City, for example, has a managed investment fund for its self-insurance, but it has put quite a layer of control around that that insulates it from political demands to reduce the transfers to the fund or otherwise, in order to, for example, keep rates rises down. And I would remind councillors that in recent years, for example, we have not made contributions to the emergency reserves. One of the drivers of that is to keep the rates rise at a more affordable level. And so, yes, councillor, you would run the risk that that same approach might be taken by a future council, and therefore you would be self-insured, but you might not have the funds available that you intended.
So just to follow on, for you, Mr. Chairman, any thought been given to having a national body to do this insurance? And I'm particularly thinking about the local government funding agency, which has been a real success. Is there some ability for an organisation of a similar ilk, or even perhaps them, to do the insurance? Because and there must be some real advantages of having some scale across the whole country.
Through you, Mr. Chair, I would agree with the councillor. That would be a advantageous approach to take, but it would require buy-in from large number of local authorities or central government direction. The last time something similar to that was looked at was around 2016-17, when they were looking at the local government risk agency approach. I'm not sure whether that will be resurrected under the current government, but certainly if you think back to the LGFA, it was actually 9 councils, typically referred to as the Tight 9. Tasman was one of them, who actually did the work with the government and set the LGFA. Other councils set it up, and then other councils joined after that point. So I think there needs to be political buy-in at quite a high level across a number of councils, but certainly given the challenges that all councils are facing in the insurance aspects of their risk management, having a more of a coordinated national approach would be advantageous for all councils.
So I'm just wondering for you, how, and obviously we've got a very proactive, bear this term, liaising with the government and higher authorities, if we should be encouraging them to perhaps have an initial conversation about this.
Through Mr. Chair, that I believe would be a useful approach. Also, Te Ura Kahika, which is the regional council grouping, they are having conversations. They principally have to cover river assets, think of it, stock banks and work like that. They were concerned that if the Three Waters reforms proceeded, they might be isolated in terms of getting cover. And they are talking about having a wider collective across the regionals. But of course, that's only 16 councils. And so I think we need to ensure that if there is an initiative, which I think would be a good idea, it needs to be driven at the political level, and then staff and other groups can get in behind it.
I'll talk to them.
No, I certainly endorse those comments, Deputy Mayor, and I think in other sectors where I've seen them collaborating to go to market, they've done so nationally. And these arrangements typically seem to be dependent on how much volume you can put to the market in one bucket, as to how much benefit you can receive from it. But it seems to me there's some good ideas in your report and in your verbal presentation this morning, Mike, that maybe we need to have a plan, because we can't just jump straight to self-insurance. It would need to have a business case and be evaluated. But I think there's quite a lot of work that seems to me could be done on things like reviewing deductibles, reviewing whether some assets wouldn't be insured or not, looking at different types, with motor vehicles, for example, burning cover is a possibility, which is a form of profit sharing with the underwriter. And that needs to be done first to see what can be done in reducing the cost to council. I think also, business interruption insurance, we've had the best test we could ever have of the COVID pandemic, where the council had to stand up an operation in very short order, and it did so, and it enabled the council to carry on. So things, business interruption insurance, when you think that we've done it, tested it, and it didn't cost anywhere near the sort of cover that was been in the policies. So I would like to see a report or a follow-up report come back to this committee where we can look at the potential savings and benefits that could be possibly realised from just a harder look at the whole insurance space for the council.
I could just endorse those comments, Mr. Chair, and recognise that right across the council sector, there are areas where working collaboratively across 67 councils, I may have the number wrong,
roughly that,
would bring real benefits, because there's a lot of reinventing of the wheel happening. And I think the new minister is actually open to those types of thinking from what I'm hearing from contacts there where I've raised these issues at, with contacts in Wellington. And I think that is a long-term game. We've got to deal with the short-term one, but let's push ahead on seeing if we can get some traction on that long-term plan through the more political channels.
Any other questions? If not, can we have a mover and seconder for the resolution to receive the insurance update, please? Thank you, Councillor Butler. Thank you, Graham. All those in favour say aye. Aye. To the contrary, carried. Thank you very much. That brings us to the end of the open agenda. I need a mover and seconder to move into public excluded, please. Councillor Butler. Graham McGlynn.
Yeah,
oh.
Might be better with two councillors.
Yeah. Okay, Councillor Butler and Deputy Mayor. Thank you. All those in favour say aye. Aye. To the contrary, carried. Thank you.